If you're at the Affordable Housing and Homeownership Comprehensive CRA perspective, this is the right room. This is the right panel. Thank you. Welcome. So Qualen and I with Umpqua Bank are really happy to welcome you today. We are super energized at Umpqua Bank. You may have heard we closed a little merger with Columbia Bank on March 1st. We are now the largest bank headquartered in Oregon, thanks to that merger. And related to that merger was our community benefits agreement was born out of that merger. That rollout began April 1st. We think of this 5-year community benefits agreement as a blueprint or roadmap to building out our Community Reinvestment Act commitment. For those of you who are not familiar with CRA, the CRA is a federal act that obligates banks to be active in the communities that they're physically located, active in lending, active in investment, active in service. So today we've got a celebrity panel here to chat about the intersection of CRA, CBA, or Community Benefits Agreement, affordable housing, and affordable home ownership. Qualen with our home lending team and myself with our affordable housing commercial real estate team, we think of the CBA and our commitment to CRA as a ongoing works in progress project. It's a beginning, a springboard to a very welcome challenge. Yes, it's a piece of paper. It's a 5-year plan. It's got commitments, right? It is things we're obligated to do in relation to our merger, but we think of it as more than that. We think of it as a challenge to take what we really believe and roll it into an action plan and a strategy that goes beyond just a 5-year commitment. It's not just our mandate. This is a question of our character and our culture as a bank and as a community partner. So I'll start there because we could go on, and there's not enough time for that. So if each of you could do a quick introduction, your name, your role in organization, that'll help us get started. Qualen?
Well, I am Qualen Carter, your community leading officer for Oregon and Southwest Washington. Really glad to be here. And before I pass the microphone, I just say take a moment to look around in the room, look at all the people in the room. We are here at the Oregon Housing Conference. We are the ones who are out here advocating from different organizations with different agendas to try to meet the needs of the community. And so in this space, we are just one. Umpqua Bank, and each individual is just one part of it. But if you look across the room, we are all here together to serve one purpose. So just know that this is a conversation for us to have in Oregon, and we have all come together to have this conversation about affordable housing. So I'll pass the microphone. And
thank you for that. It takes all of us. It takes all of us. I'm Trell Anderson. I'm the CEO of Northwest Housing Alternatives. We are a nonprofit community development corporation, primarily focused on affordable rental housing across the state, and we also are a homeless service provider in Clackamas County.
Thanks, Joe. Hello, my name is Erica Calderon, and I'm the Director of Housing for an organization out in Western Washington County called Bienestar. We too are a 41-year-old organization who develops, owns, and operates affordable housing for specifically the Latinx community. We're one of 3 organizations in the state.
That's Mike. Hello, I'm Kiba Giscombe. I'm with the Oregon Housing and Community Service, OHCS, and I'm the Director of Homeownership. And we're just here to listen to some of the concerns and talk about some of the things that we're doing in our agency.
All right, Dominique Merriweather. I'm the new Executive Director for Proud Crown. We are a community land trust. Our mission is to provide affordable home ownership opportunities in Oregon. We also do work in Washington State, Clark County specifically. Just interestingly enough, I know you didn't ask for this, but my background is in commercial lending. I worked at Umpqua Bank for many years, so I have a very strong lending background. I also worked in for an affordable rental developer and Innovative Housing Inc. And I just took this job, so I kind of touch all the areas that we're talking about today, and my answers may not stick specifically to home ownership. So,
Perfect. Quick housekeeping. We're going to save questions for the end, just so that we can make sure to leave room for our panelists' discussion. Before we kick it off with questions, I wanted to take a quick inventory of the room to help us get a flavor of our audience, so we can tailor our thoughts and responses to who's in the room. If you would raise your hand if you're involved in the development of home ownership or affordable housing, please raise your hand. Awesome. How about finance, bankers or investors? Excellent. Architects or general contractors or subs? Oh. And raise your hand if you're interested in home ownership. Lots of hands. How about multifamily rental housing? Okay. One last one. Resident services. All right. Okay. So I have some questions, but this is a celebrity panel with strong opinions. So I think of this as more of a casual, free-flowing conversation. Feel free to go off script from the questions. So let's start with home ownership. Those of you who work in the home ownership space, how does your work intersect with home ownership? What are the biggest bottlenecks and concerns in your daily work? Erica, can I pick on you to go first? Okay.
Yeah. So about what year are we in now? COVID still did a number on me. I think it was in 2020. I kicked off for the very first time had approved homeownership program within Bienestar, as I needed more work as a developer. But what I do know is that the Latinx community and those that live in Western Washington County are in need of housing. So what are the biggest bottleneck issues that we're seeing right here? I mean, I've worked in homeownership as a homeownership counselor in my past life since 2010. I started off at Neighbor Impact in Central Oregon. And since then, like, it's the same things that we're seeing. Inventory is an issue, and the type of inventory, right? What I see currently is we're seeing builders going out and building homeownership that is expensive for good reason, due to, you know, costs on pricing of land and such, but they're building $500,000 houses for 2 bedrooms and 1.5 bath, and it's not matching the community that we're trying to serve. That's a bottleneck issue. I mean, I could also talk about on just the lending side, the fact that, you know, in the early, like 2012, when I saw a lot of Latinos coming in and wanting to get into homeownership, they had previously gotten I-10 loans in the early 2000s, went through the foreclosure crisis, lost a lot of their housing due to bad information, misinformation, just not being educated, and were prepping now to become homeowners again, and or their family members. And then I-10 loans were like non-existent at that point. And so then what we started seeing is college graduates for like second generation Latinos or Latinas coming in and trying to buy houses for their parents and not having the income, and, you know, trying to be savvy about with banks on like, how can we get approved? We're ready to go. We want to buy. It's a dream. And they were coming to organizations that I was working at, and we were trying to work with partners to let them know like the financial, the type of financing that you're approving is not matching community. So that was another.
I think mine is work. Okay. Could everyone hear me? Okay, good. I think one of the biggest bottleneck, I'll be honest, is we're a large agency. So within our own agency, we have to make sure that we're doing things efficient. And outside of that, we're also dealing with high home prices, high interest rate, and also the down payment assistance. A lot of our down payment assistance need to be increased so individuals could get into those homes, and we're not immune from the high prices, the high interest, and the extremely competitive market. So that do impact affordability in trying to get individuals into the right homes. I think one of the biggest things that we're trying to do to adjust to that right now is we're trying to be extremely proactive and trying to get things out there in a quicker fashion so we could have more people to participate in the programs. And we're also looking for more culturally specific lenders and financial providers to help our marginalized communities. So those are some of the bottlenecks that I do see in our agency.
Okay. Thank you. So again, I think for us, land is always going to be probably a big issue for us, especially in the core metro areas, like, inner Portland. We're doing there's more land that seems to be available in some of our outlying counties. And also we have a project going on in Southern Oregon where we're developing 84 homes right now. And so, and we continue to talk with organizations outside of the Portland market for partnering on projects they might have. So land availability is a big one for us. And also just our methodologies of being able to carry a piece of land that we might be able to purchase, but then there's like, how do we carry the cost until we get the project developed? Also, really quickly, the capital stack, our financing, a lot of times like home ownership is at the bottom of the list or it's not specifically called out. And so like we'll have governmental agencies that provide home ownership. They provide affordable housing lending opportunities, but home ownership isn't necessarily called out. And you call them like, oh, well, yeah, we didn't want to exclude home ownership, but we didn't specifically say that it's a priority. And so like we should be a part of the continuum of affordable housing, and oftentimes it gets confused or we're not specifically called out where other options are. I'll just put it that way. And then for homeowner financing, we really need lenders to portfolio mortgages, and not only first mortgages, but also allowing our homeowners to tap into their equity. We steward the lands in our organization, but at times, the homeowner may need to repair a roof, or they want to upgrade the kitchen or the bath, put more value into the home, and there really isn't a way for those homeowners to tap into their equity because they see our deed restriction as a second lien, and then they don't want to either. It just gets really weird. So I think one of our challenges, bottlenecks, is just lenders and lending and how they look at homeownership from an affordable perspective, and not really, and always thinking about how they can sell on the secondary market as opposed to like doing what's really good for the community and maybe portfolioing some dollars where they might not have done so before.
You were touching on one point that I just wanted to point out there, and I thought you were going to go more into it, but it's just the AMI's limits, right? Like they need to go up. And so any kind of programs that come out of banks, I've got a loud voice. Okay. Any programs that come out of banks, and when you're layering funding, you're getting stuck still where we're trying to convince people that like it's not 80% AMI that's going to be getting into the house market anymore. We have to look at 100% AMI and above, in my opinion, for us to be able to like move the needle and get people in now, because that's the group that's struggling because they're just a little over income, can't get that grant money, can't get the first time home buying programs that are awesome from them, but don't make enough to do it on their own. So they're stuck. Sorry, Trell.
Yeah. Trell, I want to make sure your voice is heard. Tell us how your organization intersects with affordable housing. What are some of the biggest bottlenecks and concerns facing Northwest housing alternatives?
So we focus on rental housing development and ownership. Within that, we support residents with programs such as IDA program, individual development account, and help facilitate that home buyer education and the opportunity to buy a home. But our work is primarily in developing and operating affordable rental housing, multifamily. So the way that we intersect and are related, that first of all, we have a pipeline right now under construction of about 600 units around the state in rural properties and in the Portland metro area. We have about 2,000 units in portfolio, multifamily around the state. And some of the bottlenecks that we experienced in our latest generation of projects and are seeing as we are lining up the next generation of projects include access to land. Right, all of the best sites are either done by market rate developers, or they are being. I appreciate you setting me up here with being frank about my language. The best sites are being hoarded for future development, and so the sites then that are available for, say, the land trust or other development for single family or multifamily are small, so we can't get to scale, or have environmental contamination, which we don't want. Why would we want to house anybody on contaminated properties? Or they're difficult to develop. They're on the slope, or they don't have infrastructure. So that's a huge bottleneck for us, is access to land, particularly the best sites that pencil best in any deal. Another is the long timeline to secure funding to put our capital stack together. I mean, Dom, I so much appreciate how homeownership is sometimes an afterthought when the allocations are coming out of state legislature and out of the department. And it takes so long to get commitments out of public funders for a deal or a project. So that leads to long carrying costs. Right now we're experiencing pre-development expenses north of $1 million before we can get to closing. And what community-based nonprofit organizations have that capacity to carry to closing? I'll note that's going to get worse. What we're hearing coming out of Oregon Housing and Community Services for the next round of funding, and I'm again speaking for multifamily, is that there's going to be a new criteria. They won't commit funds until you are 90 days ready to close and proceed with construction. So our carrying costs just went, because we can usually get some pre-dev lending, or once we get a letter of commitment, we can approach our lending partners, right, for pre-dev loan. Well, now we got to carry that expense all at our own risk for a longer period of time at probably double the expense. I don't know how we're going to do that. That's a brand new bottleneck that's coming. We have probably 12 projects on our books right now from concept to leasing, and that's probably going to shrink to 4 or 6 going forward under this new criteria.
So with that said, there's some challenges that you face because of the times and the difficulties of serving the underserved market. So the question today is about how the bank, where's the intersection? How do you see, and with optimism or just looking at it intrinsically, how do you see the banks as a whole? Because it's not just an Umpqua bank conversation, but how do you see the bank stepping in and what they can do to assist, understanding that there's a Community Reinvestment Act? How can we be a better support and be a bigger support to the work that you do?
Yeah, pre-dev lending. I mean, my colleague, Kimberly Horner, and I were having this conversation in the hall earlier today. Kimberly represents PCRI, Portland Community Reinvestment initiatives, 30 years in celebration in the Black community, for the Black community, and she can't get a pre-dev loan. So that would be my answer and my example. We actually are pretty good. We have a stronger balance sheet. We have a bigger portfolio. I have better luck walking into your bank or any other bank and say, could you take a look at us and consider pre-dev lending? We have, people look at our pipeline, but for Erica's organization, for Kimberly's organization, that's a different conversation. And that needs to change to continue community-based work, particularly in communities of color.
Right. Can you speak to what the changes, that you would be expecting?
Yeah, you're giving me permission.
Yes.
So probably what I think it was on Nueva Grace that we were developing and we were talking, and we came over to Umpqua, and we were really excited that we got the project, and we're starting to look into having you become one of our partners. And I remember you looked at our balance sheet and you said, Erica, you need $5 million in liquidity for Umpqua to be able to go into a deal with you. And next, and exactly what Trell just said, as a small CDC, Bienestar, if you followed the history of it, went down. It had its ups and downs. We had the portfolio, we had our net worth, we have the experience, like I said, 41 years of developing and owning and operating affordable housing, and yet our organization couldn't meet your underwriting restrictions. So I would say it's not just about, the pre-development loan, it's also adding on and being like, and what restrictions are going to come along with the pre-development loan that you're going to create, right? Just like affordable housing, we had to lower the screening barrier to screen appropriate people into living into our portfolio. We're taking that on as a risk as owners and operators. We're lowering the barriers. You can have certain types of felonies now. We believe that everybody deserves housing. If we're going out there and doing that risk and bringing in populations, then we need to see lending restrictions being lowered as well, and being partners and allowing us to come in without saying you need $5 million of liquidity for us to be able to do this deal with you. Because as Trell just pointed out, it's getting harder and harder and more money. And I'm kind of worried about what's going to happen to the Bienestars of the world.
Right. I think one of the questions that I would like to ask, and I kind of wanted to ask this out in the beginning, you have the perspective as being the leaders of your organizations. How do you see the banks as a whole? Again, this is just speaking to the banks as a whole, being able to support the work that you do for the community. You have the development you just spoke to, but what about the needs of the communities? And every underserved community has different needs, but how do you see the banks being able to support you in a deeper fashion?
I think the bank could help us with, the bank is more flexible and nimble than we are. We're a big agency and it takes time for us to turn. And I know that we do a lot of services, and we sponsor a lot of programs and try to get more homeowners in the state of Oregon. We sponsor more with more developers. But I think the banking industry could help us with how we pair our lending force, our lending money, or our bond to create more products to the Oregonians. And they're able to like focus on more communities of colors and communities that have historically been underrepresented. Because like I said, the bank have an opportunity to move faster than we can. Even though we could support the bigger picture, we still need support from the bank to help us with more money for down payment assistance and all those different programs to help homeowners into their properties.
Okay, well, these are loaded questions, and you know that, right?
Yeah,
Okay.
This is a safe space, right? We wanted to have the conversation.
Okay, so I think the first thing that banks and any organization could do is to be intentional about what it is that you're doing, and to be market specific as well. And so if you're, using an equity lens, then be intentional with the way that you use your equity lens. If you have, for instance, so I think that's one thing that we all could do better as a community, is to be intentional about our efforts, especially around righting some wrongs that have occurred in housing throughout our nation's history when it comes to people of color and our native land holders here in America. But, you know, aside from that, I think just sort of specifically with banks, there's things that, you know, like the community development department is just one piece of a bank. And I think that from top to bottom, banks need to look at what they can be doing from a Community Reinvestment Act perspective. So your ALCO committee, you know, we talk about institutional and municipalities holding a majority of undeveloped land in our communities. And we just sort of let them hold it because it makes the balance sheet looks really, really well. And their asset ratings and their Wall Street ratings are good because they have a strong balance sheet. But they hold so many properties that are undeveloped in our communities. And we just sort of think that it's okay. And let's ask ourselves, could one of those properties be used to take care of needs that we know that are in our communities as far as housing goes? Even some of, you know, especially, you know, we're moving into this internet world of banking. A lot of banks have been shuttered, the ones that like sat in our communities, and they just sit there, and then someone comes along and helps the neighborhood gets more gentrified, and then you get like BOLI. So if a developer in our world got a hold of the property, we couldn't build up and have commercial on the bottom because there's BOLI. So we need our government to think about how we zone our land so that we can have residential above, whether it's ownership or rental, and also have community invested businesses on the bottom floors, and it doesn't outstrip us from the cost of development. I mean, those are some simple, pragmatic things that we can do if we all work together, you know, to address the needs that we all know are out there. So I think about your ALCO committees, and when you look at your balance sheets as a bank, what are you holding on to as an asset? And why not, you know, let someone like us come in and buy it from you at book value instead of real market value and use it as a community good? Your special assets groups, when you take things into foreclosure, are you looking at who your community partners are in our world that might be able to take those homes or those apartment buildings and turn them into affordable housing for somebody? So there are many things that banks can do that fall outside of the CRA or community development department that could help us all along. But I think, you know, we're a capitalistic society, and you know, shareholder value means a whole lot to many banks, and our communities are suffering because of that. So I think those are just a few things that we can do. And additionally, most of the bankers are part of a bankers association, OBA. Like, get your fellow bankers to get on board. Like, be our advocates out there as you guys hold your annual meetings and your quarterly meetings, and you get together for RMA sessions and things like that. Like, you all should be our partners in this, and it takes, you know, someone to step up to the plate and actually be leaders and to lead others along this journey.
If I can add just one more component to that, I noticed in the community benefits agreement, there's a big philanthropic commitment as well. And I would say getting those that philanthropic angle aligned with homeownership, aligned with rental housing development, in particularly capacity building, not technical assistance, but capacity building.
Well, yeah, I do, because it's true. I think I was at a different bank a couple months ago and got an invitation, and I always get confused, and I've been doing this for a while and I still get confused. I'll humble myself, even though Grace gave us a great shout outs on like who's in the room, right? And so like I'll start giving I have an idea right now. There's 60 single family homes that I want to go after and bring into Bienestar's portfolio. It's very ambitious. It's about a $22 million portfolio. I have a meeting with a big banking financial institution. I sit down, I talk about the concept, and they look at each other, even though they brought me in and said like, oh, how can we help your organization? And I'm like, okay, well, this is my idea. This is what we want to do. We have this opportunity. And they look at each other and they're like, yeah, I think we were thinking like $15,000 to like give you, and like you're caught in one of those situations where you're just like, yeah, I mean, I'll take 15,000, but you're a $1 billion or maybe even trillion like institution. Like, who do I talk to? So then they sent me to like the 20-something floor, and they're like, oh, we have a great guy for you. Okay, well, yeah, well, he can help you with that. So then I go, and it's my rep that I'm working with on a project. He's like, hey, what's up, Erica? What are you doing? And I was like, oh, well, I have this new idea. He's like, yeah, no, that's not me. He's like, but I can connect you with that person. And so it's just like, I'm excited to hear exactly like what Trell's saying, like bringing the team together, right? Like, because I am busy and tired and trying to create housing and be part of, but I don't always know who I'm talking to. It's so hard to understand, like, okay, this is great. You guys want to help. You say you have money. Where is it? Like, who am I talking to? Like, who can I pitch it to? Because yeah, if we just want to talk about lending, that's great that I can talk to your lending person. But on a $22 million portfolio, I already know that they're going to ask me for, a hefty percent down, 15% or 20% LTV, loan to value. And that is like $5 million. So who's going to give me $5 million?
So Erica, I would write the check now if I could. There's a lot of complexities. I think there's a personal view of what affordable home ownership and home housing looks like, but you shared something, and I'd like for you to just in this space kind of speak to it. It's hard to do this on both sides, from the nonprofit and from the financial institution side, right? But how, and I want to have a bit of optimism, because whenever we talk about affordable housing, it's always kind of like, it gets really dry in the room. I'm inspired by you all, but you talked about some innovative ways that, outside the box. Can you kind of speak to what you envision a way to maybe reach a goal that has seemingly been almost impossible, that you spoke to?
Yeah, like the idea that I'm talking about right now, or
the how it could possibly happen.
the how?
Yeah.
Writing the check.
Well, yes,
like, that's one, right? Like, I need to know. So it's one of those, you come at it up. So the portfolio itself, the reason I'm like throwing myself out here on this right now and like advocating for this idea, is because it's all 3 and 4 bedrooms. And it's crazy to me that we're at a Housing Oregon conference and we all know that the problem is like inventory, yet there's this inventory of 60 single family homes that are going to be released, and are not being, well, I'm not even gonna make that comment. I want to take the opportunity and I want to seize this opportunity to go after those 60 single family homes, because it's exactly what my community is asking for, right? They're asking for 3 bedrooms and 4 bedrooms. And honestly, if you look at the portfolio itself, it's under market, the value. I can work with that. I'm like, cool. Okay. So I'm not trying to make tons of money off of this either as a developer, right? Like, I just want to put that inventory into the correct homeowners in Oregon. So the hard part is, where am I going to get the $5 million as the, the part of like, okay, Erica, like, buying a house, where's your down payment? Okay, that's my down payment, 5 million. Like, that's what's hard, is like, that's what I'm trying to figure out, because I can probably get the loan, right? Like, it's collateralized. All the houses are there. I have the smart people in finance that are backing up and working on this project right now. But that's the missing piece. And that's the piece that I talk to my executive director on all the time, is like, okay, if we get steam on this, but like, where are we going to get the 5 million? And is Bienestar going to take 5 million with Trell just saying we have a pipeline, we have to start doing other development options too? Or are we going to put it all into this home ownership venture because it's the right thing to do for our community? It's what we aspire to do as developers. We're not just here to build apartments, right? Like, it is housing, yes, but our community, I feel the weight of the world on my shoulders, because every time I go out to a property, they're just like, hey, what about your homeownership program? And what are we doing there? And so that is what I'm feeling. That is the passion you're hearing right now. That is the stress, and being able to talk with everybody here to be like, man, I just wish I could get together with a bank and talk to them, and on the back end, work with other community partners in the community. Once we can obtain these homes and work with them to convert some of them into permanently affordable housing. You know, who else needs some of this inventory? But the fact that it's just going to be released and it's going to probably go to, I shouldn't make assumptions either. I don't know who it's going to go to. It just keeps me up at night.
And just to back Erica up, so Proud Ground's been operating for nearly 25 years. We've lost 0 homes to foreclosure. So there is likely a way for her to get that $5 million at very little risk to banks. Our experience is 0 foreclosures in 25 years almost. So there is a way for the smart people in the room to show up and help her out.
So I have a confession to make, which is my manager's in the crowd, so I can't actually commit myself to writing a big check, but I have an idea. Even though my expertise is not homeownership, I do understand bank bureaucracy and I have an idea and we're going to follow up offline.
They passed me the mic again. So one of the things that I believe that in this kind of space that we should look forward to is collaboration, right? I think that there are community partners that can band together to achieve goals. And I think financial institutions, to a degree, we could find out how we can do this. As I opened, I said that we are the community. It has to be something that can work all together. I want to get to a part of this conversation about promoting. This work is always advocacy. Yes, you need all the resources to be able to do what you do, but there is an advocacy part to this. And how can financial institutions, going beyond the conversation we've had about the resources, how can we get alongside of you to help in the advocacy?
I could start. I think I missed out on one of the questions earlier. Within our agency, we literally have a home ownership division to have talented individuals we're trying our best to improve the pipeline for homeowners. So being a part of this conversation is really good because it's like the same restriction that we're having, and also with the issue of carrying that piece of this stuff that we're trying to work on internally to try to figure out how can we help as many developers and homeowners as we can. So I think the biggest piece is collaboration is important to help us all to get out of that deficiency that we have right now with home ownership. So we get funding, but we also need banking to help us too with our products. And we also need, where we may come short, we'll like to have other people to help us with certain gaps so we could get people in. So outside of this conversation, I think collaboration is extremely huge to actually get to the goal of helping as many Oregonians as we can.
Yeah, I mean, just quickly, I think I just add that it's important to have the right people in the room having the conversation. And whether we're talking about, rental housing, again, I worked at a rental affordable developer, and, how often do you bring your residents into the conversation as far as what the next project's going to look like, talk about their experience living in your communities or whatever the case might be. So I think it's important, as banks, as folks who are community minded, whether we're on the ownership side or the affordable side, is to also think about who's missing from the conversation to make sure they're there. Again, it goes back to intentionality. And it's not that we can solve all the problems, but I think there are ways that we can do things better and maybe be more effective, and also cut down the timeline that it takes to get shit done. You know what I mean?
There's some real opportunity for advocacy right now and joining in coalition voices. The governor's housing production advisory group is moving a lot of material forward really fast, with the purpose of increasing the speed of production and the number of units produced. There's a whole finance subcommittee, and I don't know that I've seen bank representation there. Listening to the policy shifts, listening to the changes, Bankers Association. So that's a place where I think where there's real policy engagement happening. And I think we would love to hear the bank's voice in those rooms, because we end up being in the middle a lot. I'll use the example of recently when the LIFT documents were revisited and the department turned on project sponsors to do something about it. And again, we don't approve the loans. We don't have a back end, so that was an opportunity again for the lenders to step up and, be advocates in community with us. It got worked out. I just use that as an example of if there's an open door and an open call to organize some joint advocacy with lenders and banks, there's certainly opportunities to do that. And we'd love to start with you all, but also OBA, is that maybe the other place to start?
Yeah, I agree with that. I'll just give like one thing that was weighing on my mind too is through the Metro bond allocation and seeing all the projects come online. Like I feel like we have a lot of like lessons learned on what it means to throw out so many projects per year at the same time, right? And one of the lessons learned that I took back was pricing, equity pricing on a deal, and assuming and seeing it change from one quarter to the next. And I know that I'm probably speaking to just maybe the developers in the room, I'm sorry. But from seeing my pricing from one quarter standing strong at probably like 94 cents on the dollar, then dropping to 88 cents because there were so many housing projects in Oregon that came out, and in addition, them not even coming after my project anymore to bid on it because they filled their quota. Like that is what I would really like the governor's office to hear. And, if anybody's listening over there, I would just like to say, like, I do really feel like I appreciate the urgency. I know that we're in a housing crisis, but I just don't understand how we're going to solve in 3 years something that took us 30 or 40 years to get here. And if we could just slow a little bit down and bring the right folks into the room so that they can hear like what is going to happen when everything gets thrown out again. I mean, talk about bottleneck, right? Like it's just, it makes it hard for developers to solve, all the projects are having the same problems, right? There's electrical gear issues on the project because you're all building at the same time. There's not enough workforce because you're all building at the same time. There's pricing issues and you have gaps in financing and it's a lot. It's a real issue. And I'm just concerned, like it's just going to boil down to more money, and that might be where you guys are interested in hearing that, right? Because so.
One more advocacy opportunity. I think there's a clear and persistent danger or an existential threat to all affordable housing right now, whether it's developed by a for-profit or nonprofit, and that is property insurance and liability insurance. And all of us need to rally around dealing with that problem. We're going to roll out some data soon as an industry about the increases that we've seen in both of those categories, but it undermines your underwriting. It has undermined your underwriting in your current deals right now, if we went back and look at it. I'm not sure how that impacts home.
I wrote the check yesterday. Our insurance premium doubled.
It doubled?
It doubled. Yeah. It was $18,000 and kind of like, we don't write checks that big in our organization. I'm like, went over to our fiscal director. I'm like, what happened here? She said, well, it doubled and it's that simple. And like, what do you do with insurance? You can't go back to your agent and be like, we're not going to pay that. That's too much. Go shop us. And you go shop them and it's like, well, yeah, might as well stick with the devil that right? So, there's soft costs that are going up like crazy. And it's a factor for all of us, whether we're doing affordable rental or we're doing affordable home ownership. It's a factor for all of us. And the more price escalation that happens, then we start thinking about what's really affordable in the Portland market, especially specifically, 2-bedroom, 820 square foot apartment. And it's, I think the new ones are like $1,400 a month. That's using like the AMI from 2 years ago. So the next year, the operators, they increase their rents to catch up with the AMI levels because the operating expenses have also gone up as most of the dollars are tied to services now. And services are expensive too, whether it's maintenance, every turn is higher than it was before, and it's really it's a material cost for operators in your world, Trell, and I feel for you on that one. Yeah.
You know, one of the things that's happening right now is we've been talking about affordable housing. And this is also a conversation about affordable home ownership. I guess for me, I want to know, you know, what are your needs from the affordable home ownership standpoint? Because there's, in some way, there's an intersection between where you don't make enough money to purchase a home, but here goes a place for you to live, affordable housing, right? And also we have a home houselessness, you know, issue here in Oregon as well. Just what are your advocacy points, or just one key thing that around the home ownership piece that you see as a opportunity, or because I think we kind of get understanding we need more resources. I mean, as a nonprofit, you're going to always need resources, but what is an advocacy piece for the home ownership standpoint? Because we've heard a lot about affordable housing, and one of my concerns is that those people that need affordable housing can stay in affordable housing and never get into affordable home ownership. And so I say that based on you know, I have family that are in Section 8, and it becomes like a generational thing that happens. And so there's a lot of work and there's a lot of money in Oregon, unlike other states, that's being put into affordable housing. So just, you also kind of bear the burden for affordable home ownership as well. And what's an advocacy point now where the banks, as far as promoting the work, right? And as far as being an advocacy that you can either suggest or recommend to the audience?
I feel like I see other experts in the room because once again, like our counseling work has only started 3 years ago. It took a whole year to like get it stabilized and stuff. So we're just now starting. So if there's other people that in the audience that knows better, but like for advocacy work, I mean, I feel like I'm gonna fail on this question because I feel like I can't speak from the heart yet to understand that. But Shannon, I see you. Do you have an opportunity, Shannon?
I think we're ready for questions. Shannon, do you want to join our conversation? Let me bring you the mic.
Well, thank you so much. Thanks for the handoff. So just 2 ideas, right? Things that we know have worked in our state that we'd love more of. One is that there was a general fund allocation that many of us are just now getting to use to help folks purchase homes. It was called Culturally Responsive Organization Down Payment Assistance. So as an organization to apply, you could be culturally specific or culturally responsive. And for the first time from our state, the down payment assistance per buyer could be the lesser of $90,000 per buyer or 20% of the purchase price. Like, and some of us would like to go a little higher than 80% AMI, you know, for culturally specific organizations, especially, but that kind of down payment assistance, and maybe we even need more in this market, unfortunately, than 90,000 per buyer, but now we're talking. So more down payment assistance for culturally responsive and culturally specific organizations, please, perhaps to pair with some of our state lending options like the Oregon bond and the new flex lending product. And then another huge ask from my heart completely. We did have recently, but not this budget session, it was called Homeownership Development Incubator Program. Please hear general fund dollars for homeownership development. And if you were only using that funding source, you could go, I think it was up to 120% AMI. So like some actual restorative justice home ownership, like here in Portland, where there was horrible redlining, like, no. Now we're going to build these homes. And it's going to be a wealth building maximization opportunity. Like that happened. And then also like lift for home ownership. Weird nuance in our state is limited per home to the appraised land value. That goes pretty far in Lake Oswego and in Bend. It goes less far in wildfire impacted communities outside of Roseburg. right? So we're having some general fund dollars to pair with those GO bonds for homeownership. Really helped us. Sarah helped with these applications to make those rural development projects that are culturally responsive to make them pencil. Like, so the general fund dollars to go along with the lift, that is my DPA, general fund dollars. That would be amazing. Thank you for the chance.
And we've benefited from some of those dollars. So thank you. I mean, we've placed homeowners in recently in Washington County where they've come in. I think one home was like $147,000 in different types of stacked assistance. And so it makes that $500,000 home affordable or more affordable for families. So there are many things that are happening well, I think, as far as like from an advocate perspective. I think that when it comes to homeownership and affordable homeownership, folks need to understand that organizations like Proud Ground are a part of the continuum. Like when you look at from houselessness to like living in, I don't know, Beverly Hills or something, like there's this continuum of ownership from rental to ownership. And like we are in there in the middle. And there's a space where some of your folks in the rental are deciding whether or not they should take that raise that their company is offering them because it might affect whether or not they qualify for housing on the next recertification. Like we need to stick together and start promoting organizations that might be able to help them. I'm going to use the terminology, level up to a housing ownership option. And maybe it's not Proud Ground, maybe it's living in Hillsborough. They might have to, you know, where there are extra funds to bring the cost of that housing down enough. But, you know, on the rental side, vacancy, it means a lot, right? So you want to keep those folks in there. I totally get that, but we can't build ourselves out of this problem that we have here. We also need to help people transition out of rental and into housing options, one of which could be community land trust. It could also be some other type of affordable housing program that's out there. I'm not saying it has to be us, but if we sort of hold our own as far as silos go, we're not really solving anything. We're just kind of protecting what we feel like is ours. And I think so as a community, we could do a better job of working together and collaborating. And then I had one more thing here. Just again, and was mentioned earlier, the AMI is a big deal. And I think we should be pressuring our state to kind of help us get to that 120% mark, especially in the Portland area, in Portland proper. 80%, it's just not gonna, it just doesn't pencil for anybody. And for us, our motto is permanent affordability. So we really price the houses down the way that we do our model. And then so the next buyer and the next buyer and the next buyer is also able to tap into affordable homeownership. When we're at 80%, it doesn't give us enough room when home prices are $550,000 right now. It just doesn't give us that type of margin. So.
Yeah, let's open it up to questions. Thank you, Shannon, for jumping on the spot. Do we have a mic runner in the room? Otherwise I can. Oh, I'm the mic runner. All right. So raise your hand if you have questions. I'll bring the mic to you. If you can let us know who you are, what organization you're with, and who your question is directed to. Questions?
Well, if it's a very short question, you can just repeat it.
Okay. We can repeat questions to make it easy. I think we solved it, Trell. All right. Let's do a quick round of last thoughts. Let's start from Dominique and we'll roll and end with Trell. Dominique,
All right.
last thoughts for the group.
Well, I mean, again, I think I appreciate the opportunity to join this panel. It's a very complex situation that we're in as a community, and whether you're in Portland or in the state of Oregon or on the West Coast, it's very complicated. For us, we believe that the community land trust model is a great way to start to incubate wealth building, if you will. And I think in some ways that's been used against us. No one's going to get rich over a fake market of equity. Let's be honest about that. You know, that happened a few years ago when folks were, you know, refinancing after the market went up because all the California investors came up here and drove up the prices. That's great. But the reality is for a lot of our homeowners, we talk about community health and what health and stability does to a family. We talk about schools, talk about physical health, talk about disease. Like those are all extra benefits of homeownership that we have to consider. And so for us, the model of community land trust works. We try to stabilize families. We try to seed wealth and prosperity. We don't guarantee to create that. We just want to seed it and leave them something to sort of start a legacy building for their own families. So
I get to follow that. Thank you. The great thing about OHCS, what we're trying to do, we're trying to look at a large options of homes for individuals within the state. We're looking at community land trusts. We're looking at multifamily homes. We're looking at single family. We're looking at manufactured homes. And we also support home ownership centers across the state to work with homeowners to prepare them if they're ready for home ownership and what to expect. Through counseling, we do foreclosure counseling as well. So we're trying our best to make sure we get the buyers prepared for the home ownership could be. I know we get a large amount of general fund, but we also have some limitation that we have to work on. And there's some things that we're working within our agency trying to improve our outcomes. But I would say the fact that we do work with homeownership centers, so we don't do the work directly, but we fund the centers that actually work with Oregonians. And being here is actually good to hear from everyone's concern, because I know from my end, we're always trying to find a way, how do we package our projects better? How do we do our things better? And to kind of get the feedback of what some of the obstacles are, kind of like help me when I get back to my office to figure out how we could do it better, or also how that we're on the same track because we have some of the same concerns. So this is actually extremely optimistic for me.
I'll keep mine short. I just wanted to thank you both for, inviting me to be on panel. And then I think like the advocacy piece that I'm looking for, it feels real right now. It feels like we're starting to get there. We're still a small but very mighty CDC. I don't always have the time to read all of the new agreements that came out and understand where your new money is coming out. I don't always have time to like reach out to you two. I think the advocacy piece that I would like to see, and for any, organizations across the state right now, especially those that are trying to get into development or wanting a piece or wanting to know, is for you all to be reaching out to us and being like, hey, Erica, like we met 4 years ago. How's your balance sheet changed? Yes, it has. Like I'm glad you reached out, just because it is very hard to be in the leadership role and, want to have a strong network when I'm still trying to work at a organization that it's so important to, and that has other needs. Like that is what's really hard. And I appreciate, Qualen, just come around more often, like hit me up. Let's go have dinner and help me like download that information of what's going on in your world. And then I can pair it with like the ideas that we're wanting to do at Bienestar.
And going from a very community-based response or final words, I'm going to go up a little bit higher and say that I think measuring the impact of community benefit agreements and CRA is really about moving the stick on ownership. Who is owning the asset at the end of the day? We heard over lunch that it's going to take 800 years, 513 years to close the wealth gap through home ownership. And so you understand the pressure we're under to make that up. And so I think tracking that very specifically across all banks and all CBAs and all CRA lending, are you shifting who owns the real estate? Because then you're really shifting the impact. If we're just continuing the same ownership cycles, and not just home ownership, commercial real estate, multifamily real estate, who's owning it? Because if we're not shifting that, then we haven't changed a thing.
I want to say thank you to everyone on this panel. You all are leaders for your organization, doing important work. I appreciate your courage to be in a room of your peers, and transparency is really important. I also just want to selfishly just say that I'm just really thankful to work for Umpqua. I've worked with large banks in the past, and we're at this season of time, and there's no time like today. The rates are what they are. Where the Fair Housing Act has been an issue all these years. We're all kind of in this struggle. You should feel good about this work. It's challenging. You have limits to things. The AMI is not high enough, but you should feel good that you're in the trenches. And so I'm thankful for Umpqua because we don't have all the money, Erica. We don't have all the money to fix everybody's needs. But what I'm happy about is that behind the scenes, we have the immigrant perspective. Behind the scene, we have the African-American, we have the indigenous, we have the perspective of all the people that you're trying to serve. And we are through this community benefit, through the community benefit agreement, the CRA is something that every financial institution has to prove. That we have the people that are behind the scenes and on the front line, and we're working and building to doing that to become more of a bank that you can grow with, because where you started 5 years ago with Bienestar is completely different, and then you're transitioning with Dominic at Proud Ground. This is a new day, right? And so we're here to go alongside with you. The fact that I'm in meetings and get to feel, like you just said, like that you're starting to feel that connection. But it's going to take these conversations. It's going to take courage. And so I just appreciate you all. I appreciate Umpqua, and I just appreciate the space to be able to have a very difficult conversation, but definitely feel hopeful into the future.
Let's give our panelists a round of applause. Thank you, everyone. If anyone has questions individually, please come up and see us.